Okay, let's have a look. The basic strategy is we have a 20 EMA, which is this bloke, our orange line. We have crosses and triggers for that, and we are in short mode at the moment. It's crossed down here. What we're waiting for is a pullback into the 20, which we're getting, and we want that pullback to fail, hit the 20 and bounce, and drop below this guy here. What we don't want is the price to cross it. So while we're waiting to see what's going on, we don't want the price to cross. Now that's crossed, invalidating the short. Right, so now we're waiting for a long. So now we'll flip this around. We're waiting for this to, I don't know, come up here somewhere. It'll probably end up hitting somewhere here, these resistance points here, somewhere up here, which would make sense because here's a point that it bounced off, made it all the way up to here. When it came back down, it tried to bounce off it again, couldn't do it, fell through it, hit this point here and started falling. Right, so we would expect this line to act as some sort of resistance again, so we would expect this to come back up here. So we're just waiting for these triggers. Now, there are a few other elements. So we're waiting now for a long, a move up into here. We've still got 2 minutes to go. If you look here, we've got 2 minutes to go. Well, just less than 2 minutes now on this particular candle. We're on the 5-minute chart. Now, we have RSI moving above its 21 EMA. That orange line there is the 50 line. So naturally, it's been weak all through this area, but now it's breaking above its 21 EMA. We would expect this to come up to about here and then bounce back down to the 50 if our long has potential. Now, the problem, we take trades when this is above the 25. And that orange line there is our 25 line. Now, the two yellow lines above in the frame above with the red, orange, and green horizontal lines, that's an RSI, which is a relative strength index. This blue line is measuring volatility. So what it's showing is how big the candle moves are relative to where it came from. The relative strength index shows roughly the strength of the trend. Now, this average directional index shows the strength of the trend in the direction it's moving. Okay, so if we look, squash this up a little bit. The uptrend was gathering strength. The uptrend is weakening. The uptrend is still weakening. So we don't have a strengthening uptrend. So if we're expecting a long, out of here, we need this to get above that orange line, which demonstrates a strengthening trend. Because if you also look, watch the crosshairs,
when it got above that, it was demonstrating a strengthening trend, flattened a little, and then took off. Right, now that was a potential trade there because it had pulled back, got above its previous high, and then took off, put on some hundreds. Well, that's tradable. And your stop was under the 20, and you got stopped out here at that cross. So, the long here is we need this spike to get over that 25. Now, I'm tossing up between the RSI and a thing called the true strength indicator. The true strength indicator here seems to be seems to be a slightly better indicator than the RSI. It seems a little smoother, and we do have an oscillating zero line, which is very interesting. So I'm just watching this indicator because if we look at it, here it's crossed up above the zero line, bounced back, and bingo. There we are, coinciding with crossing the 25. And there is our trade. That is just beautiful. Right in there.